Hello and welcome to How to Exit. Today I'm here with Sebastian Amieva. He's the world's most sought after expert on mergers and acquisitions. He works exclusively with six-figure and seven-figure entrepreneurs and investors to drive growth through mergers and acquisition. Sebastian has spent the last 12 years personally implementing mergers and acquisition strategies, investing into startups, and traveling around the world. Welcome, Sebastian. Thank you for being on the show today.
Ronald, thank you very much for this interview. I'm very excited. So yeah, we are going to have fun. We are going to speak about the M&A, the topic that I love. So I'm ready for this.
Awesome. Let's just jump right in. Let's start where you started. Like, what got you into? I guess the catchphrase these days is acquisition entrepreneurialism, right? You're buying and selling businesses for a living. What got you started, or how did you get going?
Yeah, so I started a lot of business, from e-commerce to factories, different kind of business online, and I discovered it's way easier to buy a business instead of starting one from day one, right? So was the biggest reason, right? I discovered it's very easy to use the company target asset as a collateral to bring funds, to put the down payment, and to get that deal. So you get client from day one, you get revenues from day one. This was the biggest reason I started into the M&A space. To date, we closed 45 deals with my global clients. Right, I do some consulting, M&A training, some masterclass. But yeah, we are going to speak about today how to get started into the M&A, how to prepare yourself to become a qualified buyer, and all these things. Right, but yeah, I started because that way. But I discovered, as you can catch my accent, I'm not English native. I born in Argentina, Patagonia. And then I moved to the UK. I set up my family office there. And from there, I bought deals in different locations, not just in the UK. I bought the biggest paddle court in Madrid. I bought even a football club called Rayo Cantabria in the north of Spain. And then I bought the biggest LED factory in Brazil with 700 employees, 22 million euros in assets. And from the UK, I realized I realized that from first world country, it's easier to get funds, to get capitals, and to do this LBO, so management buyout acquisitions. From Latin America, it's very hard to do this. But of course, I realized that if you have the holding company in UK or in the US from first world economy, then you can bring funds and put down the funds in the subsidiary in Latin American market, for example, or Southeast Asia or African countries. I think it's a good topic today for speaking about this today, about how to become a global deal maker, right? Because I've been approached by several entrepreneurs, and they say, well, I'm not based in the US, I'm not based in UK, I'm not based in Australia. How you can do it from Africa, Southeast Asia, Latin American market, right? So I think could be nice to speak about this today. Yeah.
I like that, and what a lot of people don't know is if you want to travel around the world, sometimes I know like Australia and a few other countries, it's easier to live in a country for like get your visas and stuff to stay more than a normal vacation time frame if you own a business in the country. So there's that aspect of it, right? So
Yeah, for visa purpose.
you
Yeah,
said two
correct.
really interesting things right there. You're not bound by the country you live in, and what I caught on in the part of that conversation was you don't have to raise the money to buy the company in the country that you're trying to buy the country in. I mean the business in. So, for instance, when you were buying, something in Brazil, you
Correct.
know, not having a foothold there, knowing everybody there, like knowing the venture capitalists, knowing, accredited investors, I guess I would say, or the banking system there, might be difficult to buy a large company there. But because you have a holding company in another country, you raise money there and then take it and do the deal wherever the deal is. That's brilliant. So we can talk
Correct.
about
Correct.
that.
Correct. This is how it works. If you want to be a global deal maker, always it's good to setting up your holding company in a first world economy, like setting up the holding in Delaware, or Wyoming, or Nevada for tax purpose in the US, or setting up in London, UK, or Sydney, Australia, or Canada, Toronto, for example. Right. Always setting up the legal entity, the SPV, or the holding company in a first world economy. It helps to bring credibility also to the investors. So it make them feel comfortable to invest into your first world entity. And from there, you can bring down the funds to Latin America for acquisitions and also for Southeast Asia or African markets. Right? I think it's a very good strategy, helping helping also Latin American companies exit, right? Because it's difficult. For example, a company from Brazil with $22 million asking price, it's difficult to find a potential buyer, right? So a good way for exit to them would be becoming a subsidiary company with a holding company in the US, right? So we using a lot this kind of strategies, holding subsidiary, which it really helped to acquire deals using leverage, right? Using the leverage of the subsidiary company, and also bringing a more legal, security for the investors. Right? They want to invest into an American companies, or at least through an SPV, an American SPV, special purpose vehicle, which can be a LLC, right? So yeah, this is the the
So
strategy
that's
that we see.
yeah. So you're setting up an entity where probably closer where you're located. If you're located in the United States, it's probably Delaware, Nevada, Wyoming, and then you
Yeah,
said, and if you're in the UK or something, it's London, and you named a couple other cities there. You set up the entity there. You build your fund. You get your investors. You know that gives credibility to your project there. When you when you're going to say, let's just do Brazil for instance,
correct.
and you're looking at companies there, is there any culture shock or anything like you have to get used to in the local markets? I know every market's different.
Yeah,
I tried to buy many years ago before I even got into acquisitions and mergers. I tried to buy a business in
yeah.
Rotan, and
Oh, wow.
um, it was a Airbnb type of, not an Airbnb, but a bed and breakfast, a large one, like a little resort. And the town is a little bit, I don't know if it's still, this is 15, 20 years ago. Let's just say it's very common to pay gifts to the
Oh,
mayor and to the city. And it was just like,
braving. Yeah,
there's
yeah,
some, yeah, there's some bribery going on and stuff like that to make sure things go well. And I don't know if are other countries like that. When you get into the country, do you need to learn what's normal?
yeah.
Um,
I try to say, listen, we are gonna do the American way or the British way. We are not gonna do any bribery. We are here to do ethical business. We are gonna setting up the holding in a first world economy. If in terms of the cultures, the difference, right? Always for the negotiation, you need to understand the culture, right? How they think, the way they behave, how they negotiate. It's not the same negotiating with American person, with the Latin American people. They have different ways of communicate, right? So for me, I will bring somebody from Brazil or somebody who speak Portuguese at least, because it's another language, and I will add them into my board just for credibility purpose, and to help me to understand more their culture, to negotiate better with them, and to fully understand what they're trying to say and why they want to sell, for example. Right? I will try to
also,
bring them on board, right? Somebody.
so
But
you brought up a great point.
before doing this, sorry, Ronald, before
Go
doing
ahead.
this, hunting for deals in Latin America or Southeast Asia or Africa or becoming a global deal maker, for me, it's important to become a qualified buyer. And what that means for that, what it means being a qualified buyer. You need to know what you're looking for. Defining an acquisition strategy, defining an acquisition criteria helps to understand what you're looking for. And most importantly, everybody must to understand what you're looking for, right? So setting up the acquisition criteria, for example, defining the location, the asking price, the industries that you're targeting is important. Then developing your lenders network. Before you go in and start with the deal hunting, it's good to have at least 3 lenders. When I'm talking about lenders, I'm not saying only the SBA in the US. I'm not saying traditional banks. I'm saying start building your network with the alternative finance market. It could be invoice lenders, cash flow lenders, revenue lenders, all this kind of alternative finance market to help you fund the deals. So once you have an acquisition criteria, an acquisition strategy, your pitch deck done, your SPV ready in a first world economy, your website done, your corporate email, your lenders network. Also, you have maybe some joint ventures with family office and private equity firm matching your investment criteria. Then only then you can start pitching, the competitors, or pitching somebody who want to exit, right? But not before, because you will lose your credibility on day one, right? If you don't have all the things in place before you go out and reach out and try to do the deal hunting, right?
So when you're out there
That's
doing deal hunting, it sounds like you build your plan, right? You build your team, and then you build your platform, like your website and that type of stuff for people to come to. Then you go start to talk to business owners. I guess then, and you
correct.
find your investors. So there's four steps. You got your
Yeah,
plan, your team, right? I guess your team could include the investors or whatever, but it also includes like
Oh.
who's doing your due diligence, who's doing, can speak the
Yeah, for
language
the
or
team.
understands the
In,
culture, right?
yeah, in terms of the team, I will bring somebody who understands the culture I'm dealing with. Also, I will bring a CPA accountant for accounting due diligence, a transaction attorney for legal due diligence, and also a technical person or an industry expert. If you're targeting, for example, manufacturing companies, and I have no clue about that sector, I could bring on board somebody who have 10 to 5 to 10 years of experience in that industry to bring credibility in the negotiation table, right? So this can be your deal team, right? Somebody who understands the market that you hunting, the sector, the industry, somebody who knows about accounting, somebody about transaction, transaction attorney, and yourself as an acquisition entrepreneur. So once you have your team set up, then you can do the deal hunting. Right? For me, preparation is key on live negotiation and everything. You need to prepare yourself for the opportunity. Because most of the people that reach out to me, Sebastian, can you help me with this $10 million deal based in Florida? They doing 5 times a bit. I say, well, do you have a joint venture with any company in that sector? Do you have funds from investors? Do you have a team of CPA accountant? Do you have your lenders network developed? Do you have a website, corporate email, pitch deck presentation? When they have nothing about this, and then I say, well, you're not ready. You're not qualified buyer. Also, when somebody asks you, show me proof of funds, right, which is the big barrier for any acquisition entrepreneurs. If they don't have a proof of funds, they don't have any track record. The background is zero. They never closed an acquisition before in that sector. Then the brokers, right, or the seller, they will blacklist you. You are not gonna be ready for purchasing more companies, right? So I don't want that happen to any acquisition entrepreneur. For that, I recommend to be ready for the opportunity. Be ready, yeah.
Awesome. So, so you've got your team. You go out
Yeah.
there. What's the search look like? Do you actually do you go through brokers? Or do you have your people go like look at what's out there listed? Do you just make a list of everything in like an industry and start tackling everybody that's in that industry? Is there like I know what I do. I personally I'm kind of going around the broker and
Hmm?
looking for business owners that are 65 years old and above and meet all the other criteria, right? Plus 5 or more million in revenue. I mean, I've got a list of criteria, and that's who
Okay.
I'm reaching out to. Not that I won't work with brokers, but I've kind of been trained that brokers kill deals most of the time, right?
No, no.
So,
Yeah,
what's
in
this?
terms of how do I increase the deal flow, right? And also how I find deals through brokers and without brokers. I don't mind finding deals through brokers because I always find a way to provide the proof of funds or to provide any background of myself, right? But if you're starting from the scratch with no background, no money, no proof of funds, of course it's easier to find off-market deals. But to find off-market deals is not easy if you don't know how, right? So what I do for off-market deals I could explain, and what I do for brokers also I could explain, both ways. To find off-market deal, the best way is I reach out to accountants, lawyers, and consultants in the industry that I'm targeting. Let's say I want to buy, again, tracking companies. If I want to buy tracking companies, I will find logistic and tracking experts, consultants in that industry, and also accountants and lawyers. So I will reach out to them and say, hey, if any of your clients want to exit, right? I'm an acquisition entrepreneur. This is my acquisition criteria. I'm targeting tracking companies in the US with an asking price from $500,000 to $5 million, right? If you find any of them, I'm happy to pay you an introduction fee, right? So you pay an introduction fee to any consultant, lawyers, and accountant. Why this is my strategy? Because I put myself into the seller's shoes, right? If I am the seller, when and I want to sell my company, I will tell to three people, right? First to my wife, second to my lawyer, and third to my accountant, right? And then my consultant will know also, right? So those three people are key to contact them through LinkedIn or Twitter or any social media, and ask them and pitching them with your pitch deck, saying that you're looking actively to close a deal in the next quarter, and showing your acquisition criteria. So if they introduce you a deal, you pay an introduction fee agreement, which can be a fixed price, or you can give. Sometimes I give equity, 1-2% of the deal, or I can pay a fixed price, 10-20,000 after I close the deal. So this is how I find off-market deals. And also I using a VA. Right? I using a VA. She's working 5 hours per day, Monday to Friday, sending the script. Hey, my name is Sebastian Amieva. I am a private equity investor. This is my acquisition criteria. If any of your client want to exit, I'm more than happy to pay you an introduction fee or a referral fee. Call me if you have any news, and I put my email. And then we're sending 150 to 100 messages per day to all people into trucking industry, for example, in the US. So this is my uh, off-market strategy. And for the finding this through brokers, as I have proof of funds, as I have acquisition criteria, as I have a background, what I do is I bought already all the data from the brokerage firms and small brokerage firms in the US, 700 emails I have, and also from Canada, Australia, Europe, right? I got all this data from all the brokers. So what I do is I write a nice email introducing myself, and I paste my acquisition criteria. Say, hey, nice to connect. This is my acquisition criteria. If you have any deals, please send it over. So all the brokers are sending deals to me because they put me into the buyer list, right? So they send me deals every week, matching my acquisition criteria, not any random one, right? So it's important to build a broker list so you can send your pitch deck and they will send you. This is the two ways I'm getting this. But another way is just because people know already that I am a M&A expert. I do in M&A for a living, so they know I'm an investor, and they reach out to me for business opportunities. They send me deals. Say, Sebastian, I want to sell my company. Are you interested? So sometimes you need to exposure yourself, and getting out there and doing some different kind of digital marketing strategies. Some people do paid advertising for finding deals. Some people do a physical letter. I have a client who sent out in Germany 1,000 physical letter. He first bought all the data for the chemical companies in from 5 million to 10 million in Germany, and then he sent to physical letters saying, this is my acquisition criteria. If you're interested to exit, let's have a conference call. The open rate, the success rates are not high, but you at least gain 3-4 leads, good clients who good potential seller. So we have different kind of ways to increase the deal flow, but most of the people, most of the acquisition entrepreneurs, they think that deal flow is the most important thing. How I can find a motivated seller? How can I find a good deal, Sebastian? I say, listen, if you are not ready for the opportunity, you will watch opportunity pass by like a train, right? And you cannot do anything. You will spend 2, 3 years, 5 years trying to close a deal, but if you don't have all the foundation in place, then it's hard to close a deal. Very hard, to be honest. And also, even if you are ready, to buy a deal, even though it's hard for me, even for myself, even from big private equity firms, they analyze maybe 100 deals per year, but they invest in one to three deals. So even for big businessmen, it's hard to close a deal. So preparation is key, right? Or having someone who can walk you through the entire process, at least for the first deal. Then you can replicate the system and do it by yourself, and being a deal
Um,
maker by yourself.
I'm absolutely a big proponent of mentors and having people walk you through the deal. You know, I went the college route to start with. Like I had
Okay.
multiple college degrees. I have a master's degree in marketing, and then I realized that didn't really help me much in business. It made me a great employee for a business, but as far as getting out there, so instead of going out and taking yet another college degree, I started
Oh,
many
nice.
years getting mentors to help me through it, and that's what we're doing right here. Is we're introducing the audience to different mentors throughout the process. And so you can figure out, who do you bond with, who do you like, what do you want to do. Tell me a little bit about the process you would walk a an entrepreneur, somebody that's got some entrepreneurial experience, and they have some resources, maybe not just money, but like they have connections in the people, they can build a team. If somebody like that comes to you and they meet your criteria, what's the process you would walk them through to get them ready for their first deal?
Correct. So my methodology for working with clients or mentees, for example, is I provide a one-on-one service because I believe buying a company, buying a deal is a serious thing. Right? It's not. This reason I'm not selling online courses. I'm not selling trainings online, info products or challenges online. I do one-on-one because I like to be long-term relationship with my mentees, with my client, and my program is 12-month duration. It's not a short thing. It's not a magic pill, right? I put 12 months because some people can close a deal in 3 months, in 2 months, 6 months, 12 months, right? So we need to do a lot of things to reach the point where you start the deal hunting. So I prepare them in 2 months, let's say 45 days to 2 months. We have weekly calls, one-on-one. This is not group calls. It's you and me only. So you want to have access also to my WhatsApp number, to my email. We are fully connected. In case you have any doubt, you can reach out to me at any time. So I believe more in having this kind of mentor. This is what I would like to have before, right? So I made a lot of mistakes buying deals. I went bankrupt once. I will tell you the story later. This, but then for me, it's very important having someone, a personal connection, one-on-one, having full access. If you have any question, you reach out to your mentor, to your coach, and then together we find a solution. We together analyze deal. We together jump in a conference call with the seller, with the broker, with the investors, right? It's not like you doing everything by yourself. Right? You don't know where to start. You need somebody who walk you through the entire process. Say, listen, now, this week, you need to set up your website, your pitch deck, your acquisition criteria. Next week, you need to start developing the lenders network. You need to develop the network with private equity firm, family office. And not only that, I will give you my 6 personal lenders I'm working in the US to you, their WhatsApp numbers, their email. I provide you with all the tools that you need to succeed. Of course, some people pretend I give the key. Listen, I close this deal for you. Now you can start collecting dividends. It's not like that. People sometimes misunderstand, and it's good to say, right? You need to do the work, right? I can give you all the guidelines. I can stay for you at all the time. We can analyze deals together. We can speak with investors. We can promote ourselves. We can, submit a letter of intent together, but they need to find a good deal, and also they need to follow all the steps until they are ready for the opportunity. What I do for them, because I know proof of funds is a big thing, I provide a $5 million commitment letter, right? So I provide you, as if you're my client, I have a trusted lender who can issue a letter of commitment for $5 million. So at least you have something to show, to pass the barrier for the when the broker asks you for proof of funds or the seller, right? This is a good thing I have into my
That's always good
training
to have
program.
it.
Yeah,
It's kind of a checkbox thing they have. Once they see one, at least in my experience,
yeah,
even in the real estate world, I bought a bunch of short sales and stuff, and the proof of
nice.
funds is something on their checklist. If you don't have one, you don't pass, right? You don't
Yeah,
get past
correct.
it. But other than somebody saying, "Yeah, if this deal goes through, I'll fund it," um, there's really not much to them. There used to be some websites out there that would generate proofs of funds for. I wouldn't recommend
Yeah,
going to just a proof of fund generating website, especially in this space, right? Because here in the United States, we're really what's the word I'm looking for? We like to sue each other, and
sure.
there's a
Okay.
there's a chance that you could get nailed for failure to perform. So, but that's the only reason I even brought that up. As I mentioned, there are actually websites that'll generate proof of funds for you, and I like
Oh,
we don't
really?
want people
Wow.
using those. In the real estate world, it was very common, right? You're going to buy $100,000 house, and they'll make a bank owned house, and they would say, "Well, we need a proof of funds." You could go to
Okay.
transactwhatever.com and put in your criteria. Now there was real lending companies behind these, but we rarely used their lending because they wanted like 22% or something crazy.
Wow.
But we'd
Wow.
use
Wow.
them to generate proof of funds letters, and then we'd use our
Uh,
private lenders to fund the actual deal, so you don't have to
that's
call
a
your
good trick.
accredited investor every week and go, "Hey, I need another proof of funds." Um, you know, I get it that that's a really cool thing that you provide for them
Yeah,
because
correct. Yeah,
it gets you
correct.
past. It's a gatekeeper type of thing, right? It helps the broker weed out like the nonsense, like the people just can't get a deal done. So
Correct. Correct. Yeah.
what
So this is
what
a good thing I'm doing. Yeah. So you can ask me any more tricks I'm using to help people to purchase
so
the business.
cool. The other thing I'm curious about is like I have people all the time go, "It's cool that you're in this. You have a master's degree and you got an MBA." And I've never like owned a business over six figures, and I really tell them, depending on what you buy, it really doesn't matter, right? I don't think it matters if you have an entrepreneurial heart. I think you could do this, and I want your opinion on this. As long as you understand and let your ego go and put somebody, if you don't know how to do something inside one of these businesses you're acquiring, you put somebody in that spot that knows how to do it, right?
Yeah. So
So
if you're like me, when I was 24 years old, when I bought a trucking company with 200 employees, and I became the CEO, and I want to do everything. I want to be the accountant, the CEO, the manager, the business buyer. Then after 6 months, I bankrupted that company, and 200 people were losing their job because it was my inability to manage deals, right? So for me it's very important to differentiate, to divide. So you need to become good at buying companies, not managing companies. For managing companies, you could find an expert, a CEO who been running the same kind of companies for the last 10 years or 5 years. You need to replace yourself and position yourself as an investor, not as a manager. My system is very simple. We buy a company, we fully delegate the management, and we collect dividends. It's 3 steps, right? So don't try to be all over the place, right? You just need to become good at buying companies, analyzing companies and buying, and professional business buyer, right? A qualified buyer, I call it.
awesome. I could see, it sounds like you have a real world experience of buying something and trying to do it all and chasing it into the ground, right? I've been there and I built something, and one of the things that people don't get is it takes a different CEO or owner, or you call it the head guy. It takes a different CEO to create a company and take it to a couple hundred grand than it does to take it from a couple hundred grand to a couple million. Then often it does to take it from a couple million to something substantial, to an
Correct.
IPO or something. Those are different individuals with different skill sets and different mentalities. I was great at like coming up with an idea and getting the first dollar in the door and generating a little bit of income, but I wouldn't let it go when it came to the point where, okay, this is a bigger than me and I probably should have somebody take it from here and move on. And
Mm.
inside of this, acquisitions, entrepreneurship, I'm looking at like what you're saying, being the professional buyer, go out, find the deal, close the deal, put a great team in there, collect dividends, and go find another deal. That's
Correct.
brilliant. So,
Correct.
um, jumping into the like kind of the space of being an entrepreneurial, acquisition entrepreneur, are there any misconceived notions out there? Anything that people believe about this space or industry that just kind of bugs you, and you wish people wouldn't believe that nonsense?
Yeah. So people still believe that it's a lot of going on with no money down deals, right? People, when they read some advertising, you can buy a business with no money down. So for me, no money down doesn't exist, right? So it's a big marketing catch, right? So no money down deals means that you are not using your own money to purchase a company, right? You are using investors' money or joint venture, private equity firms' money to put as a down payment, and then or you using your alternative finance market lenders, right? This means, so this is the big thing around buying a company. People say how this can be possible, how you can buy a business no money down. It means that you can use others people money like investors or lenders, right? So,
They should say none of your money down, but they don't,
and
right? It's a marketing ploy.
correct,
$1, $1
correct,
deals. Like, okay, well, the seller's not really getting $1,
correct,
right? Not
correct.
they're one of the mentors. I hope to have him on here, and I'm not going to name him by name. He coins the phrase or uses the phrase deferred down payment. So somebody says, "Well, I'll finance the deal to you, but I need 300K down." He's like, "Okay, I'll give you $300,000 down as a deferred down payment." And then he uses what you're
Correct.
talking about, invoice financing, or I'm a big real estate guy. I like the property split thing. I like businesses that own real estate. That's what I'm kind of looking
Yeah,
for now.
asset
And
heavy deals.
yeah, I have REITs and investment trust and other stuff looking for commercial properties. So the goal would be to buy a business that owns the property, sell the business off to them, lease it back, and use that money to fund the deal as part of my funding strategy. And I've seen them done. I've actually came really close to, to getting one done, and it got drug out at the last second. But that's the complexity of these things, right? You've got to be willing to get in there, work the deals, try to see them all the way through the end. Some of them are, like the two that I can think of off the top of my head that I wanted most at the beginning. I'm the one that said no at the end because there was something wrong, right? So in your space, how does that look? Do you get through deals, go through due diligence, and go, yeah, we probably shouldn't touch this thing? Do you get those deals too?
Yeah, so in terms of due diligence, you need to have three key people on your team, right? Yeah, a proper M&A transaction attorney, right? Because there you have a lot of general general lawyers, but they don't have a clue about corporate world, right? So you need to find a proper transaction attorney, a proper CPA accountant who done due diligence before, and then a good technical person. So you have three people: accountant, CPA accountant, transaction attorney, and a technical person who understand and can give you some technical report about the company that you purchasing. Right? So it's very important to have those three. And also another thing that is most of the entrepreneurs are missing, right? I'm very I'm like repeating all the time, build a data room, right? What is a data room? Say, listen, if you don't have a data room, either way you are buying a company and you sell, or you selling a company, you need a proper data room, right? It means having all the information in one folder. It can be a Google Drive, for example, right? Once you have all the information of the deal, after you sign an NDA, you start gathering all the financials, tax return, profit and loss, balance sheet, right? All the legal contracts. You need to build a proper data room with all the folders, and then you can share it to your lenders network and to your investors network. So for me, communicating that way, first of all, you need to have a proper data room, a virtual data room, and then you share all the informations with all the parties, with your lawyer, with your accountant, with your technical person, with your investors, with your joint ventures like family office, private equity firm, or with your partners, right? So what you should include into a data room, I have here, the marketing materials, right? Marketing materials, a teaser presentation is a one-page presentation, all the marketing things, right? And tools, softwares, all the stuff. Then the financial and tax information, it's important to put it into a data room, all the legal documents, all the human resources, the private and confidential data also folder, inventory of assets, the asset inventory, right? Machinery, real estate, also the appraisal of each of them, right? General contracts and customer and vendor lists, right? All these things are important to build your data room. Once you have all the information in one place, organized, then you start sharing it with your lenders network, so they can tell you, Sebastian, I can give you 70% loan to value on this. Also, you share with your partners, so everybody understand the same. But it all starts with building a proper data room, right? Using Google Drive maybe is the easiest way.
So one of the things here in the United States, it goes back and forth. The SBA always requires a personal guarantee, and if you own another business, one of the things I've seen with the last couple of deals we looked at, they try to encumber your other business, as part of the loan. They basically use the business as collateral. Are the lenders you're looking at? Is there a way to avoid that and just use the business itself as the thing, or is there always going to be a personal guarantee inside of these lending institutions that help you buy businesses?
Yeah, correct. See, I wouldn't advise to anybody to put a personal guarantee, except it's the deal of your life. You buying a $10 million deal, no money down, and then you say, well, I need to take a risk. I will make a 1 million net per year on this. I will bet on my capabilities to make it succeed. This so sometime, if it's the deal of your life, of course you need to take a risk. You want to become a business owner, you need to be a risk taker sometime. But for small deals, for nonsense opportunities, I wouldn't put a personal guarantee, right? For me, also to analyze deals, it's good to have on your team certified business broker, right? Somebody who can do valuations, right? You need to understand how much you paying and why you paying what you paying, right? So it's important to have a certified business broker or a valuation expert on your team. If you are not one, you can find anybody online, or I can refer you one from my team, right? So it's important to do valuations properly, right? Yeah,
What is your favorite valuation model? If you look at all the top schools, like the top
correct.
MBA business
Yeah.
schools, I think there's a total of like 140. I want to say
A lot.
147 is the numbers coming to my head.
Correct.
Evaluation models to evaluate businesses. What is
Correct.
your favorite? Uh, I kind of use
My
this
favorite one.
the multiple of
Yeah.
EBITDA as a
Yeah.
kind of a thumb in the air. Am I even close to the ballpark? But when it comes down to it, what is
I
your
will tell you
favorite?
my I will tell you my favorite one. But first of all, I will explain you the four that we're using. Right, we're using four methods. We suggest people to try these four. Right, earnings
Mhm.
multiple is one. Earnings
Mhm.
multiple, or using revenues multiple, the second one, or you can do a discounted cash flow analysis, or you can do EBITDA multiple. Right? So I recommend those four. Right? Earnings multiple, revenue multiple, EBITDA multiple, and do a discounted cash flow analysis. Those four are the main that we're using. But my favorite one is EBITDA. I realize is the easiest for me, and then it's easy for me to set up an acquisition criteria using EBITDA multiple. So I normally buy 3 times to 4 times multiple EBITDA deals. If it's 5 times, I'm not really interested, right? Because it's expensive for me, not for me, for my lenders. I realize that the lenders in the US, UK, Australia, and Canada, they like deals up to 4 times multiple, right? Because it's easier to pay to set up a proper debt repayment plan. So I'm buying up to 4 times EBITDA multiple. This reason is my favorite, and also I really understand well how to calculate it, reading all the balance sheet and profit and loss. Right? So, but always I request to do a valuation. Right? Valuation can cost money, of course. You can get a valuation for $5,000 or for 30,000, right? It depends the deal size, the industry, and also the valuation expert. They have different ranges, different prices, right? But those four are the ones that we're using in our M&A training program. But my favorite is EBITDA, EBITDA multiple. Yeah.
So when you listed off some of the industries you've bought in and stuff, it was pretty broad spectrum. Are there any industries you really just like avoid, like you just don't
Yeah.
recommend people
Correct.
get into?
Correct. Yeah. If you want to do your first single acquisition, or if you want to get started, right, always is good to start with asset heavy deals, right? You have two kind of deals: asset light deals like IT, marketing, cybersecurity, everything with a software as a service or test as a service. Anything IT related is harder than acquired than asset heavy deals. When I mean asset heavy deal, I mean 50% of the balance sheet must be full of assets like machinery, equipment, real estate, right? If the company target has at least 50% of the balance sheet in asset, then it's leverageable, right? You can leverage. But if it's an IT company with only contracts and a bunch of computers, it's difficult to leverage this. Except, I'm not saying it's impossible. I said it's harder, right? I have a client who bought a almost £6 million company, cybersecurity in the UK, but that company got a contract with the army, with the government, right? So when you have a solid contract, you can use it as a collateral to bring funds for the down payment. So if you want to do asset light deals like cybersecurity IT, I would recommend to having a contract with clients who are very well known, right? Very well known, or at least public companies. Yeah. So I would recommend asset heavy deals like manufacturing, healthcare, tracking, logistics. I love tracking because it's a very simple model. You have the tracks, sometimes the office, the real estate, and the clients, right? So you can use the tracks and the real estate as a leverage, as a collateral, right, to raise funds.
Do you think there's a disruption coming inside of the trucking industry with self-driving vehicles?
Yeah,
And
yeah. With the self driving, and also it's very problematic. It's complicated to find drivers. Yeah. It's a lot
right.
of with the drivers. We have this problem right now, this issue with finding drivers. We need to find recruiters to find drivers for us. This is a problem, and also, self-driving also is gonna be something disrupting in the near future. Right? Yeah.
It almost sounds like almost every industry I talked with an advisor on, or even when we were working on a really big marketing roll up not too long ago, and
Yes.
every industry has this shortage. And it's funny is like almost every acquisition I look at is like, okay, the next bolt on is I need a staffing company that specializes in finding great employees for this. You know, I, is that just I mean, to me, that seems like a great bolt on for almost any company that doesn't have a really good recruiting department. If you're big and you need, if you need more than a few employees a month to scale and grow and stay in business, you know, hiring or buying a company that's what they do is find those people.
Yeah,
Seems
yeah.
logical.
Seems logical. Yeah. Some people, for example, they want to get started into the M&A buying a single acquisition, which is the most reasonable thing if you are starting with. But some people came to me and say, Sebastian, I have no clue about M&A. I never ran a business before. I don't have an MBA. It's not mandatory to have an MBA, but anybody can buy a business. But they want to do an IPO and a SPAC right away, right? So they want to do a roll up of a fragmented industry and rolling up 6 companies, and doing more complex things, right? I think always it's good starting with baby steps, buying a company from 500K to $5 million, prove the system, then you're gonna feel more confidence, and then you can do roll-ups or merger, or you can do different more complex acquisitions, right? Or doing a holding subsidiary one, the one we were speaking in the beginning, right, are more complex ones, right? So otherwise, I recommend.
Yeah, we were doing a marketing roll up, and I'll tell you, the one thing that surprised us is the legal fees per company that we brought in to have the transaction attorneys negotiate getting the contract signed. Um, the first one was close to 50 to 60,000 bucks to just get the contract
See.
defined. Negotiate through the first one, and they promised to get it down to about 25 to $30,000 per acquisition. But we were looking at between 20 and 30, maybe 40 acquisitions. So the legal fees alone were going to be substantial. So yeah, I would agree with you on there. If you're just getting started and you're thinking I'm going to do a roll up on day one,
Yeah.
it's okay if you got really deep I can't even speak, really deep pockets. You got money
Okay.
to work, or you have investors lined up to help you out that maybe you've done that before. But if you're starting off with doing LBOs, bank loans, investors funding, asset funding, stuff like that, the legal fees alone could be very painful. Closing fees to close each one of those, because everything you roll up and roll in has some expenses associated with it, right?
Yeah,
So
let's speak about the expenses. Yeah, you're right. You're right. You're on point. So most of people say, Sebastian, how to engage with a lawyer or with a CPA, right? They are very expensive. They want to charge me 30,000 for a due diligence. They want to charge a lot of money. So they want to make me sign a letter of engagement, right? So what I recommend is to find solo lawyer or small medium firms, right? So you want to contact them and say you're an acquisition entrepreneur. This is my acquisition criteria. This is my board, and we're looking forward to close a deal in the next quarter, for example. Right? We are not in a position to pay upfront fees, right? We want to pay at the after the completion. We pay whatever fee you charge. We pay after the completion. So it's difficult to find this kind of person, and most of them they want to charge you a contingency fee. What it means? If the deal fell through, then you need to pay a percentage of the main fee. So let's say $1,500 if the deal fell through. So if you fell through 100 times, you're gonna go bankrupt, right? Just analyzing deals. There's the problem. So you need to become good at analyzing deals, and then you want to spend time with your lawyer and with an accountant, because they will charge you money, right? So you need to be 90% sure you're gonna close that deal. So also you don't waste their time, right? And you don't waste your money and your time also. Right? So I would recommend to fully analyze deal, becoming good at deal analysis. Deal
I like
analysis.
your idea of building out your own deal room. Even if you're like the buyer, you build out your deal room, you have your folder, you have everything there. Your team goes through it and says, yes, this is a deal. And then you contact the attorneys or your investors and say, here's one I'm serious about. Uh, Being new before I even hired my first mentor, I got my hands on a $13 million a year concrete plant that had a lot of problems. And I won't say too much because they're local and they might hear this at some point, so I won't beat them up too bad. But my team was, I have a friend who is finishing up law school and he's brilliant in business. I brought him in. I had a guy who's he could sell he could sell snow to Eskimos. He's just really good in sales and stuff. So I had him on the team. I had a friend of mine. Her name's Kat. She's a retired forensic accountant, and we needed her because the books were a mess, right? So I built a team around this, and we used a lot of that team's time, and we never really got what I would call a deal room done. As a matter of fact, the offer ended up being a dollar down deal because they just didn't give us the financials. And they on a $13 million concrete plant, and I've said this on the show before, so my people have heard this before. The biggest pushback we got wasn't the fact that we offered them a dollar deal and taken over like $4 million worth of debt, and then
Wow.
but the biggest problem they had is we actually had a 45-day unwind clause because we didn't have a full deal room. We wanted to get in, clean up things, have the accountant go through the books, do them right. And then in 40 to 5 days, if we seen uglier skeletons than we'd already found, right? If we seen uglier demons than the ones they've already showed us, we wanted to be able to hand it back to them. And they had more pushback for the fact that I could hand it back to them at the end of 45 days than they did that I was offering them a dollar down. And it sounds like a dollar down, but they had $4 million worth of debt we were going to assume, but
Yeah.
and clean up. But
Another thing that yeah, I forgot to tell you. So people don't waste time with the wrong seller, right? You need to know how long they've been trying to sell their company and fully understand their why they selling, right? They always say I want to retire or I have somebody ill in my family, but it's always good to get into the company, do a physical viewing, right? And doing the viewing of the company, trying to hang out with the seller, try to fully understand their why, right? Because most of them they are not ready. They don't have a so a red flags for me is when they don't have a valuation done, when they don't have a proper data room in place, right? They don't have all the tax returns. This is a red flag for me. They are not ready for an exit. If they don't have an M&A advisor, also is a red flag. If they don't have a CPA who knows all the process, right? When they say, Sebastian, please don't tell anybody I'm selling, of course you need to be confidential because you can scare all employees, right? But when they trying to they don't have a broker, also can be a red flag. If you want to sell your company, I will hire an M&A expert. I will do evaluation. I will find a broker who help me to do the listing. I also another point is they don't know what to do after they sell the company. Right? So a good closing for me is what you're gonna do after you sell the company to me. For example, this is the question I ask them: what do you gonna do after you sell the company? After I purchase this company, what is your plan? If they have no plan, also it's a red flag. Also, is some tax implication, right? So if they don't know what to do with the money after after I purchase the company, then it's a red flag. I'm going to be wasting time with this guy. Maybe they don't know, but I will say, listen, if you don't know, I will put you in touch with my tax planner, right? Who you can discuss the tax implication. You can check out if it's better to do an asset or a stock purchase. What is better for you in terms of tax purpose? Also, if you have any state tax implication, if we are in Delaware or which state we are in the US, you need to know all these things about tax. So always it's good if you sell in a company, having an M&A advisor, a broker, and a CPA and a lawyer to help you to build a data room, and also a tax planner, tax planning expert who can help you with all the tax implication after you. So this is the question I ask. So what you gonna do after I purchase this company? And then, well, I'm gonna go and sailing around the world. I'm gonna be traveling around the world. I'm gonna buy my daughter a house. You need to know and asking a lot of questions in the first meeting, right?
And that helps build rapport, right? A lot of people think that business owners are only interested in selling to get a big fat check, and in my experience, that's probably down fourth or fifth on their priority scale, right? The fat check means something to them, but in a lot of cases, what's going to happen to the company? What's going to happen to the brand? What's going to happen to their employees? Those take a higher precedence in a lot of cases, especially in that smaller $1 million to $5 million business owner who's been doing it for, say, they built their business over the last 25 years and they want to retire.
Right.
I found personally they're more interested in what's going to happen to their friend Bob, who's worked for him for 25 years. Of the
Right.
26 years he's been open, that guy's been beside him for 25 years. Than they are getting an extra, 50 grand, on their business. And I ask a lot of people on the show who have sold businesses, did you take the highest and best offer? And I haven't got a yes yet. It's usually like there wasn't that much difference. Like it wasn't six figures difference between the two offers, but it was significant a lot of times. And the
They are
buyers
worried
off,
about the legacy, that
yeah,
you keep the legacy after the purchase and don't start fighting everywhere. So they worry about you keeping the legacy. For that, is very important to sound credible and knowledgeable, right? You need to know the industry that you targeting, right? Also, a good thing I do for my clients is I say, listen, if you want to target manufacturing companies, what I suggest to you is buy a market report, a market research, to fully understand how much the manufacturing industry worth in the US, for example. What are the top 10 players in this industry, right? Who are the top 10 M&A advisory firms targeting these companies? Who are the family office, private equity firms, who are operating in the manufacturing industries? It's very good to know all these indicators, all these people before you go and do the site visit, right? The viewings. And so when you start speaking with the seller, they will say, okay, this guy really know my industry. He's not like a financial acquirer. He's a strategic acquirer, right? He knows my industry. He will keep the legacy, right? He is not gonna do a dodgy thing, right? So he know. So this is a good thing to do before preparing yourself, understanding the industry, buying a market report. You can buy it on statista.com or any of those websites. You can get a market report, a market research. You can do your search, learn about the industry that you're targeting. This is important. If you don't know it, also you can bring an industry expert, but do both things, right? So it's very powerful to build rapport on the first meeting with the seller.
So that's a great idea, building rapport by knowing the industry inside and out and having them fill it. There's actually a like this what's the word I'm looking for? A safe pair of hands. They want to know that they're handing that business off to a safe pair of hands. And even if you're not going to be an operator, meaning you're going to be a acquisitions entrepreneur, somebody else is going to run it. You're the one talking to that business owner, and if you can't instill that safe pair of hands, like you have enough industry knowledge to do that, it could be a real problem. I could see that
Real, yeah.
100%. It was a big hurdle on the concrete plant. One of the biggest hurdles that we had with them is we didn't know anything about concrete. We've never been around it. And they, that's all they did, right? Like they were a manufacturer of like grease trap, storm shelters, culverts, and that type of stuff. But the what really got past that is I was like, look, you have a general manager in place already who knows this inside and out. I'm probably going to have him run it or bring somebody in to help him run it. I'm not,
Right.
this isn't what we do, right? We're not going to step in and tell people what to do on this. That would be absurd, right?
I think
You
you
know,
need to. I think you need to explain how is gonna be this process done, right? You need to explain the process. You need to create an idea on their mind. So say, listen, after we purchase the business, we want to keep the legacy, and then we want to move this ex-employee to become the new CEO, or we want to keep you as a coach for the next 6 months, so you can train the new CEO. We are going to be recruiting a new CEO with 10 years of experience in manufacturing company, for example. And if you stay on board with a pay salary for the next 3 to 6 months, it will be very helpful for doing a smooth transition, right? So always it's good explaining what is going to happen, because they will have a lot of emotional things going on psychologically, and also they have a lot of questions, right? What is going to happen with the company after I leave, right? They're worried about all of these things. So it's always is good showing transparency, showing all the hands. Say, listen, I signed the NDA. I got the information. If I am agree, I will submit a letter of intent, and after that, I will send my guys, my accountant, my lawyer, and my technical person to do a due diligence. If everything looks like what you said before, we're gonna start drafting the share purchase agreement. If we agree on the terms of the share purchase agreement or stock purchase agreement, then we sign it and we celebrate together. After, from day one, I have a 100 days plan. After that, we're gonna delegate the management, or you can stay as a CEO if you want to stay. If you want to fully retire, you can suggest somebody from inside the company to move up and become the new CEO, or we can bring a new CEO with 10 years of experience. Right? You always showing the process, what is gonna happen from the beginning to the end. So then it make people feel safe, right? This guy really know what he's doing, right? He been closing deals for the last 12 years. He know how is the entire process from the beginning to the end, from before acquisition to post acquisition. Right? You need to fully explain what is going to happen, so everybody feels safe. The accountant feels safe. Their lawyer feels safe. All the shareholders feel safe. The employees feel safe. Right? Safety, offering safety and transparency, showing the process. Right?
all right. Well, Sebastian, we're at 53 minutes now. We're getting close to top of the
Perfect.
hour. I want to make sure
Yeah.
people know how to get a hold of you. So I'm going to put up
Okay.
your contact information there.
Okay.
For those of you guys who are listening, it'll be in the show notes. If you're watching one of the videos, it's on the screen and will be in the description. It's his name.com. So it's Sebastian, Sebastian, and the last name is AMIEVA.com. But again, it'll be in the show notes, and it should be on the screen if you're watching it on YouTube or one of the social media channels. And then I'm going to show you how to get a hold of him on LinkedIn. Sebastian, your name's pretty unique. They could probably just search for you on there, but
All
there's
right.
the
Yeah.
URL for that. It also will be in the show notes. And reach out to him, say hi, tell him what kind of deals you're working on, and really kind of spend some time. I recommend everybody kind of interview your mentor too. If you choose to work with him, make sure you guys can work together. He's going to do the same thing. He's going to vet you, but the same way goes back when you're like, I talked to 3 or 4 different people before I hired the guy that I hired. And out of respect, I won't say who that is because I want you guys to reach out to Sebastian. When I have him on here, I might admit it. But I do look forward to, I'm going to work my way through the different mentors as I do different deals, and just to get the experience and knowledge of each of you guys. So don't be surprised if I circle back around at some point and go, hey, I've got one for you. Let's work this together. But I'm taking a different approach than I took with the real estate. Jokingly, I always tease around. I have about 140 or $150,000 bookshelf over here from all the materials and programs I bought when I did real estate. So now that I'm in this space, I'm gonna pick one guy, do their type of deal, get it done, and then go to the next guy and learn from them, and then work my way around. But again, Sebastian, thank you for being on the show. Is there anything that we missed? I always ask this question. We talked about a lot of topics. We covered different angles. Is there anything in the back of your head going, man, we probably should have talked about this a little bit?
Yeah, I think I could stay talking with you for ages, right? You asking very nice question, and of course, I love this topic, right? So the most important thing you were talking about mentors. For me, it's very important that when you find a mentor, when you engage with somebody, to do a diligence, right? Don't let yourself get cheated by the marketing stuff, or the all these tricks like a buying no money down deal and all these kind of tricks, right? So do your due diligence. Does this guy close any deal in his life? How long have this guy been, training people? Check the testimonials, the real one, not the one you pay for being a testimonial. Check the real testimonial. So do your due diligence is very important. The same with when the company targets, when you're doing a due diligence, you need to do the same for hiring a mentor. And if anybody have a question for me, because we're running out of time, they can reach out to me on LinkedIn, or they can Google my name and check out another postcard I did, or interviews, or all the referrals, or people talking about my work and what I did in the past, right? So yeah, what I say now. Thank you very much. Thank you, Rona, for this great interview. I'm feel very grateful. Thank you very much, and I really had fun. Yeah,
Yeah, awesome. Stay on the line for just a second after I end the stream, and I do
sure.
appreciate you. Thank you, and that's the show today, guys. Thank you for listening.